welcome to Saxo Bank Market Call. Today is February the 20th. Yesterday's news bullets: Swedish CPI out at minus 0.8% versus a minus 0.4% expected, so a larger drop than expected. Other than that, Canadian CPI out mostly in line. The CPI core month on month out at a 0.1%, and year on year 1.4%. US NAHB housing market index out at 20 versus 19 expected, so marginally higher than expected. ABC consumer confidence also from US out at minus 37, which was the same as the prior reading. Overnight in Australia, we had Westpac leading index. It was out at minus 0.2% versus 1.0% prior reading. This morning we'd had German producer prices out month on month at 0.8%. It was 0.3% expected, so higher than expected reading from Germany. Market developments in the FX range bound US dollars ahead of the CPI survey today. Also, dollar weakened on the overnight Australian figures, limiting the scope of a rate increase. Stocks, Europe slightly higher yesterday. US erased the early gains and closed marginally lower. Nikkei down 3.25% overnight, mostly led by car makers and oil-related companies that are negatively correlated to the oil prices, that is. Fixed income, US 10 years higher gain on risk aversion. Eurobonds gaining on worries in Europe are related to the BNP and Credit Suisse stories. And overnight on the Asian equity sell-off, JGBs are looking very strong. In commodities, the big story yesterday or overnight was the crude oil prices broke the psychological $100 level, not closing above but touching in new highs. Has sold on a tad after as speculation of increasing stock on tomorrow's inventories. So what's going on? Japanese shares slid over 3% to their lowest in a week after news of KKR Financial Holdings, a public traded credit fund, had delayed repayment of commercial papers for a second time, causing for some profit taking. The share price of KKR Financial is down by over 40% since July. And also in the subprime news, write-down related losses continue to accumulate and spread out. Now with the BNP Paribas, France's largest bank, reporting a 42% decline in Q4 profits as the preliminary earnings released on January 30th. Crude prices have fallen off the new record registered at $100.1 a barrel, as investors were seen locking in profits after a 4.5% gain yesterday. Inventory figures due to be released tomorrow are expected to show a stockpile growth of 2.3 million barrels, up from 1+ million barrel figure. Further consolidation can be expected before new highs are made again. Today's calendar. We have BOE minutes out at 9:30 GMT from, of course, from UK, and later today we have US CPI at 13:30 GMT. Also from the US at 13:30 is building permits and housing starts. But important in the evening at 19 GMT we have the FOMC minutes of the 29th-30th of January meeting. Coming highlights: tomorrow we have Swiss trade balance and UK retail sales, and from the US we have Philadelphia Fed and leading indicators, and also the DOE inventories, that's the crude oil inventories. FX trade of today is cable. We're seeing playing the event risk of today, the BOE minutes and the US CPI. A potential whammy is forming in cable as we have, as I said, major event risk. We saw the break of support at 194.50, targeting recent lows around 193.85, and then the 2008 lows at 93.40. We'll keep a stop bid at 194.82. In equities, we are looking to sell BMW. We're seeing this higher dollar price and higher oil prices is so set to hurt this sector, the car manufacturing sector. And we like the technical setup in BMW. We look to sell between 36.25 and 36.75 with a stop above 37.50, targeting initially 34 euros, of course. In futures, we are looking to buy natural gas. It's looking to break the long-term resistance level at 904, 906. But we want a clean break, so we buy at 860 or 880 area with a stop below 830, targeting 1130. That's all for today. Thank you for listening.